Hello guys, we are in Saturday and it's the end of Thanksgiving holidays. Hope you enjoyed yourself. In this video, I will just try to give you an idea of investing that it is forever. You can do forever and don't expect any money until you fulfill this idea. Now, what is this idea or what is this technique? Is you do as you do in 401k. Now, what does it mean? It means that each paycheck or each salary, you cut some money, whatever is this money, $10, $20, $100, $200, it doesn't matter how much this money, but it should be consistent. Consistent, it means that you do it forever. You will never stop doing it. You can calculate by yourself later, but I give you just the idea and try just to think about it. Try to put numbers, okay? Put numbers on the piece of sheet or paper and then calculate and see yourself. Now, why consistent? Consistent means that when you begin investing, you don't stop, because investing is a habit. Okay? It is a habit. It means it is something, it's like people who do sport, or people who do writing, or people who draw or do painting. It's an activity that you should do always and never stop, but it has a regular time. For example, 2 weeks paycheck or a salary in 1 month or whatever. You do it only once when you have the money, and you keep that amount of money always going to your account. Now, after that, understand that the broker account is like a bank. It is the same. It has nothing to do. Don't think that you should trade or you should invest. No, it's like a bank. Now, this money, either you buy stocks. If you are a good investor, you want to pick companies, or you can go and check some good guys who have, like Warren Buffett or something, and you take some of his picks in portfolio. Just an example, if you don't know what to do, okay? And then you keep putting money in years. Now, what is the good thing about this technique? The good thing is that you put money in good times and in bad times. And this is the key thing to understand investing. Sometimes people are crying, like this year, where it is the correction. Most of the people, they don't make money, and a lot of people, they lost money. Okay? But understand that this year is the year where you put your money, because in 1 year or two, when we have this correction or this bear market or whatever is gone, you have bought consistently with a big discount. I will give you an example to understand, because a lot of people, they don't understand until they see something concrete. Take an example of 2008, where we have what we call the major crisis, 2008, where all stocks have been going down. Even Warren Buffett stock, which having all the stocks, 50% down. So if it is 20%, 50% down, this market is at its low. And we have seen during the whole history that markets doesn't stay in one place. Sometimes they are in a bull market, sometimes we are in a bear market, sometimes we are in a correction like this year. It means the market gives you discounts always, and whenever you buy, always you buy with discounts. You will see that since you are not going to see trends or to see where the trend begin or when the bull market or when the bear market begins. You don't see that because you are planning for the future. You are planning for 5 years, 10 years, 20 years, or 30 years. I don't know about your age. If you are young, like 20, 25, 30, it's the good age to invest. If you are 40 or 50, it doesn't matter. It just you have a solution to the problem when we invest. This is my technique. And almost all the people who are doing this for a long time, they will get the benefits later. Okay? If you are in a bull market and you begin to buy each month, 2 months, 3 months, you buy it, you continue to buy. Sometimes you buy in a bear market, sometimes you buy in a good market. It depends. Now, if you are scared of the market, you don't want to buy stocks because if you buy a stock, maybe this company is doing too bad and you lose a lot of money, like GE, General Electrics, when it goes like more than 55% in 1 year. If you are scared, you can buy indexes. Indexes, it means just you get the general average of stocks. You are not interested to buy a stock by itself. But understand the difference between indexes or sectors or industries and between stocks is that sometimes stocks give more than the indexes themselves. Okay? And the risk is more. So you should decide for this. Now this, you try, if you want, you go to a 1 year, and let's say you buy once, you take a stock, and let's say the first of each month you buy, let's say 100 shares. Just an example, okay? So in 12 months, you try to see if you have made money, yes or no. Most of the time you see that you have made money because sometimes you buy on the top, sometimes you bought on the bottom, sometimes you bought on the bear market, sometimes you bought on correction, and this is a continuous. And understand that stocks, it means they give the highest performance compared to gold and silver and to bonds and to all the other stuff. It's the best. There is no, go and study history of stock market. You will find that stocks are the most important thing, but you need techniques. You need to be having what we call patience. Okay, so this is for those guys who are interested to build wealth. It means to build something strong for 5 years, 10 years, 20 years. It means you are just building. You have just a little money. Understand that there are a lot of people who are paycheck or salary. Okay, it's not each month he can have 5,000, 10,000 he put it in the market. No. Okay, understand that regular people, they don't have that much money. And if you ask me, what's the difference? Why a lot of people, they do 401k? 401k is good also because the company itself gives you some profit that matches your money, which is so good. But the problem the problem with 401k is that if you want your money right now, you can't get it. And this is a problem. Let's say you have 10,000, 20, 50,000, 100,000, and you want to take your money because you need it to buy a house, to buy a car, or to go wherever you want. So 401k will be a problem because they will not let you take your money out. Another problem with 401k is that all the money is not taxed. Whatever you take money, they will go and tax you. And this, it's not so good if you take $100,000 from your savings and you take it out, so they follow you with tax, and it's a real problem. Now, this idea of investing, it is something that it is a good habit. It's like someone who is doing sport. It's good for the person. It's good for the body. It's good for everything you do in life. Doing sport is good. So it's like that. But this investing has a relation with money. Sometimes you need money in your life. You have hardship. You have something. You lost your job. Whatever happens in your life, you always find that having some money is something that it is the best thing you can ever think in life. When you have money, you don't invest, you don't do nothing for your future, you don't have a business, you have nothing, you have only your paycheck or salary. But understand that when something happens, you lose your job, everything will stop. It means you don't have a means of income. There is none. You begin to search for other jobs. This can take time. And sometimes you don't find right away. 1 month, 2 months, 3 months. If you are living in an apartment, you don't have a house, you will be kicked out. You will be living in your car as people do. And if you ask all these people that have been doing so bad, it's just because they don't think about their future. Future, you should plan for it. I'm not saying you should take this technique or that technique, but you should think about your future seriously, especially money. Money, you don't play with it because it's the heart of life. Without money, you can pay the rent. They kick you out. Okay, you don't pay bills. Also, you have trouble. So all this has to do with a plan for your life in terms of investing. And if you do a habit, there are many habits you can do in investing. It's not just you invest. And the good thing, you don't sell. Okay, you don't sell because you are thinking about 5 years, 10 years, 20 years. Like Warren Buffett said, if you think about investing, think about 20 years. Okay, 20 years. It means it's not you buy today, after 1 year you make some money, you sell it. No, it's something continuous because you are building wealth. Okay, and all this money that you saved, you put in the stock market, if it is doubled or tripled in 2 years, 3 years, 5 years, 6 years, 10 years, it is doubled, tripled. It's just money that comes without doing anything. It means you are not working, you are doing nothing. Even if you are not good at picking stocks, you can take what you call ETFs of major indexes or sectors or industries, and you leave them for years. It's not you buy today and you see a loss and then you sell it, because if we are in a correction or a bear market, you see the loss, but you continue to buy, and when the market goes back again, you will have bought with cheap at a discount. And this is what the great people have done, especially in investing. So try to think about it. If you like the idea, try to make a plan. Go, for example, to someone else, like your CPA or whatever. If you have a business or you have something else, it means it is a matter of the future, and you need to think a lot in order to make a plan. Now, this is just for those investors. I'm not today. I'm not thinking about swing trading, about day trading. This is another thing I will speak in another time. Thank you very much for watching. And the Thanksgiving discount is still today, Saturday, and tomorrow, Sunday. So please take advantage of it. Thank you very much.